Hello everyone. So welcome back to another interesting topic, crude oil and its impact on Indian economy. We will also be discussing about how the crude oil impacts the stock market. So these days you are seeing a lot of news wherein crude oil prices increasing, sometimes it is decreasing, so it is impacting the stock market. So all these things you are hearing.
If you are looking at energy purchases from Russia, I would suggest that your attention should be focused on Europe, which probably we do buy some energy which is necessary for our energy security. But I suspect, looking at the figures, probably our total purchases for the month would be less than what Europe does in an afternoon. So you might want to think about it.
So I thought that I will shoot this video wherein you will be clear on the concepts of crude oil, how the price of crude oil increases, decreases, and how actually it will impact your investments. So first, let's start with the uses of crude oil. So where all are the crude oil used? As you all would be knowing that crude oil is used as a fuel for transportation, like for petrol, diesel, or aviation fuel. But in addition to this, it serves as a raw material to chemical products in pharma industry, solvents, fertilizer, pesticides, synthetic fragrances, plastics, polyurethane, paints, artificial rubber, road tarring, waxes, lubricants, cosmetics, deodorants, medical devices, tires, energy to power industry as well. There are n number of applications. If I keep telling, there will be a long list. So the basic intention is that crude oil is used in various applications and which is vital component for all these applications. Hence, crude oil is also called black gold. Now coming back to India, India is a oil importing nation with 80% of the crude oil requirements being met through imports. 20% of the total import bills are in the name of crude oil. So as the crude oil prices increases, more cost of production by various industries because they require crude oil as the raw material or as an ingredient to their production. So the cost of products also increases. Otherwise, they will have to absorb the increase in price of crude oil, which probably they will not be doing. So they are forced to increase the price of the product. So otherwise, they will be having margin pressure as well. So increased cost of product means the inflation also increases. So that is how the increase in crude oil prices increases or boosts the inflation as well. If you see, for every $10 of crude oil increase translates to 0.1 to 0.3% of inflation increase in India. This is an approximate value, but this is for you to understand. You have seen that the crude oil has increased from $65 per barrel to as high as $135. So every $10, you can imagine how it has impacted the inflation in India. So if you see, the profit margins go down as the crude oil price increases. So one industry which is not actually directly impacted by the crude oil price fluctuation is the tech industry. Companies like TCS, Infosys, etc. Logistics and power costs are directly related to the crude oil price, though those are worst impacted sectors. One thing is there, as the crude oil prices depreciates or reduces, the rupee becomes stronger and also stock market goes high. So this regarding this forex I have explained in detail in my last video. So I hope you have gone through that and you must understand now as I speak. So now the question, how crude oil price fluctuates? So it's purely based on demand supply dynamics. So when Russia-Ukraine war started, sanctions were imposed on Russia. So Russia has got lot of oil reserves and they have a sizable amount of oil exports. So crude oil exports. So these sanctions has reduced the production or exports by Russia. So this has led to decreased amount of crude oil available in the international market. So reduced production or reduced supply means the demand is almost the same. So supply reduced, so the availability of crude oil has reduced. This has led to increased rate of crude oil, whose rate has gone as high as $135 billion. So there are other nations like Gulf countries, they have not increased the production rate, because if the Russia has decreased and if Gulf countries had increased the production rate, then the crude oil price would not have gone that high. But these countries also take their advantage, wherein they also restrict their production so that the increase in price is converted into profits by these countries as well. Also in between, you have seen that US has increased their crude oil production, also supplying crude from their reserves, so that the price of the crude oil comes down, because this has severely impacted their inflation. So as I told, crude oil price increases, then the product cost increases, then the spending increases, then the inflation increases. So because of this high inflation, US has been forced to, the Fed of US, the central bank of US, basically the Fed has been forced to increase the interest rates, and this interest rates increase has led to reduced GDP quarter on quarter on US, and this has led to recession in US, which currently you are reading in all the news. Also, US had requested Arab countries to increase their production of oil in the absence of Russian oil, so that the prices doesn't increase. So because of this higher rate of production, the price of crude has decreased in between. But again, now the production or the demand or the various manufacturing or other productivity of countries has gone down. That's why the GDP obviously have reduced in various countries like UK, US, etc. So lesser production means lesser requirement of crude oil. So lesser demand means the price of the crude has gone down. So it's like supply demand dynamics, as I mentioned earlier. It's also interesting to note that the crude oil price can go up not only on a reduced supply but also on an increased demand. So if you are having a great GDP quarter on quarter, and the production or the productivity of the countries go up, and there is a growing economy everywhere, so we have a lot of manufacturing or spending going on. So more manufacturing means you need more raw material or more crude oil. So this can also lead to increased crude oil price because of the increased demand, not because of reduced supply. So again, this is subjective. So as far as India is concerned, I have identified three main things as far as the crude oil fluctuation is concerned. So if the crude oil price increases, then the current account deficit, the deficit increases, because India is a net importer of crude oil, heavy importer. So if the crude oil prices increases, the import cost increases, and obviously the exports will not be that much. So the imports increases means the current account deficit increases. Also, if the dollar appreciates, then you have to spend more, even more, for the cost of buying crude oil import. So this will also add to the increased current account deficit. Another thing is inflation. The second thing after current account deficit is inflation. So as I told, the crude oil price increases, then the cost of products also, which is using crude oil, increases, which is almost everything, you can say. So the cost of all products increases means the spending also has to be higher, and hence the inflation also goes high. And the third thing is fiscal deficit. So if you see the crude oil price increases, the government has to pass on that price to the public or to the companies. So if the government is not passing on that price, because to control the inflation, because passing on will increase the inflation. So if the government opts to absorb some amount of increase in the crude oil price, then this means that the revenue of the government decreases. So revenue in terms of tax, and the other revenue is GST. So these are the two revenues these days. So if the crude oil price increase is been absorbed by the government and it is offered at a reduced price to the public, so in that case, the fiscal deficit increases. So what is fiscal deficit? It is the difference between the revenue minus the expenditure. So expenditure is like they have a lot of spendings for infrastructure boost, for various states, for its own expenditures. So that is one thing, and revenue is from taxation and GST. So if this revenue is impacted because of the price absorption, because of the increased crude oil price, in this case the revenue decreases, so expenditure is anyhow there, so this will increase the fiscal deficit. So this current account deficit, inflation, and fiscal deficits are the three things which would impact Indian economy or the government overall as a matter of increasing crude oil price. So increase in fiscal deficit means the economy growth also is impacted, and various rating agencies can tell that Indian economy is not poised to grow in next say few years. So this will also impact the countries which are being invested by the foreign institutions. So they may think that the economy is not poised to go high going forward in India. So we may have FII selling as we are seeing now. So in that case, then the investors may go out of India, and this will also downgrade the stock market, or the prices of the stock market may depreciate based on this. So this is the back-to-back events or relation of crude oil to the market as well. So one takeaway out of this is that the dependence of India on crude oil has to be reduced. So if we are switching to green energy solutions like hydrogen, renewable energy, and whatever other sustainable energy, so if you reduce the crude oil imports, this will really help Indian market to boom a lot, because our dependence is mainly on the crude. So if any of the countries stops supplying crude oil, this will really crumble our economy. So by 2030, the government has thought of decreasing some amount of crude oil imports. So if at all they are not meeting that bigger target, but even though they are able to reduce some amount of crude oil imports, this will really boost our economy. So we can even look for nuclear energy solutions wherein it will reduce the energy dependency on crude oil. So hope this session on crude oil and its impact on stock market and Indian economy helped you get some insights. If you have any doubt, please comment in the below comment section, and if you like the video, please like and do subscribe. We'll meet again with another interesting topic in the next session. Till then, happy investing.